As I'm sure most of you guys have seen, last month Stephan uploaded a video stating he bought a bank. He starts off the video standing outside a building that presumably looks like a physical bank, implying that he actually owns it, he can manage it, and he'll be in and out of it. But that's not the case. Spoiler alert, he just invested in a bank. He's same as me buying Goldman Sachs or JP Morgan through the stock market. It's a bit cooler because it's a private investment, it's a private company. However, it is a very clickbait title. But however, it is an interesting thing. So as you can see in the comments here, he did get a bit of hate saying it's just an ad, it's just a marketing scam, blah, blah, blah. But there was a few people quite interested in it. So it is a US investment platform that's essentially a lottery. You deposit so much money and in return they put you into a prize draw where you can win a bit of money. So he goes on to mention how it's similar to a UK government-backed scheme called NSNI, premium bonds, done through the National Savings and Investment organisation. So I've had premium bonds, as you can see here. I've been investing in premium bonds for the last year now, and I put in about just under 6,000. I think it's 5,800 in total, and I've been doing that kind of routinely. Every month I've been putting a bit more money into it. So I've been using premium bonds as a short-term investment because there's no risk of losing the money. The risk is encapsulated in not getting a guaranteed return on your money, or even a return on your money in the fact that it's only done for a prize draw and there's no real tangible asset there. So as last 12 months have gone on, my total prize history is 0. So, and this does look kind of bad. It makes it seem that it's not worth it. And for many people, honestly, it won't be worth it. So I have a friend who had premium bonds given to him when he was born. So he's 22, 23 years old, and he was given £1,000 worth 22 years ago. So just comparing that, and spoiler alert as well, he's earned nothing in them 22 years from £1,000. And while £1,000 is not a lot of money, if it was just invested in the S&P 500, you can see here that it would now be worth 3,300. And you've also got to bear in mind, 1997 was kind of leading up to the dot-com bubble, where all prices were inflated and it suddenly come crashing down, and you still would have made threefold your money, whereas he had made nothing. So that's the first kind of thing about why premium bonds and how they're similar. They're a lottery-based system, and obviously the more you have in, the more you can win. So as you can see here, this month's millionaires, they both had the maximum amount invested, £50,000, which kind of again implies if you don't have enough funds to maximise it out, it's not worth doing. This is kind of built on again by them reducing their rates. So NSNI to slash savings rate and premium bond prizes. So it goes on to say about how cash accounts, the top savings account, they're offering just 0.01%. It's all rubbish. You're not getting your money returned anywhere. However, NSNI matching this, they did have a 1.4% payout. Again, which sounds good, but then you've got to account for that's people winning millions. And if the maximum you can have is 50,000 and you win $1 million, your annual return is, in the thousands. And that accounts for millions of people getting absolutely nothing in return. So it goes on to say here the odds are moving from 24,500 to 1 to 34,500 to 1 for every £1 bomb in December. And again, this means you've got a 1 in 34,500 chance of winning a £5 bond. And obviously as the prices go up in value, it reduces, starting off at £5, which is pretty poor. And the annualised return is 1%. And again, I know it's not guaranteed, but looking at an index fund, if you're looking for the long term, average of 7 to 10% a year, not guaranteed but quite dependable, is a lot better value for your money, in my opinion, especially with the market downturning recently. So I've just gone to my account here. You can see in the last week really, I was about 7% up, and it just completely plummeted because of the UK and European lockdowns. So Boris Johnson announced a national lockdown for England on the Saturday just gone. I think it is the 29th or 30th. And then all the stock market has gone down. So I'm looking forward to seeing what the market does on Monday. And if it drops even further, or even if it doesn't, I'm going to be averaging down and putting more money into it. As when the prices are lower, obviously there's less risk because you're buying things at a cheaper price. And in long-term horizon, they should go back up. So in his video as well, going back to Graemes' Yotta Bank, he kind of states that a reason to buy it is because of where it's not guaranteed, you get so little in your cash accounts, it's just not worth putting your money elsewhere. which isn't the case. If you look at a very strong, stable dividend company like Coca-Cola, they offer a 3% dividend yield at their current price. So that means if you had £100 in Coca-Cola, you would be getting 3% or £3 or $3, whatever you put in, every year pretty much. And while dividends aren't guaranteed, you can get companies that are very loyal and consistent with the dividends, and they can be very predictable, especially when you look at Coca-Cola. So in the last 7 years, its price has gone up, but in relative terms, it's been pretty stable, but they have been increasing their dividends still, meaning you would have got a lot better return than you probably would have in Yotta Bank or premium bonds, invest in just a dividend paying company. So that's kind of my consensus of how the premium bonds and this Graemes, Stephan's Yotta Bank works. In my opinion, it's not worth it. Like I said, I had it in my portfolio just for the short-term goals because I didn't want to risk losing my money with all this uncertainty. But now that it's dropped lower, I feel I can sell it and buy it at a lower price, and hopefully it'll go up in value. So let me know if you guys have put any money to premium bonds, or if you're from the US Yotta Bank, and kind of what your thoughts and opinions are on it. Like I said, for me, it's a no-go. I am withdrawing my money, and I will only be putting money in premium bonds if I literally have nowhere else to go, which is unlikely in these all cheap prices at the moment. So thanks for watching, and I'll catch you guys next time.